Hello, in this lecture we will be working a problem concentrating on accounts receivable and allowance for doubtful accounts and be working on the allowance method for writing off accounts receivable. So we're going to have the activity over here. These will be the transactions that we're going to record. We're going to record them in the blue area here in the general journal. And then we also have the trial balance over here, and we're going to see the effect on the trial balance. Note the format of the trial balance as we will have the assets, of course, will be in green. Then we have the liability accounts, the equity accounts, and then the income statement, revenue, and expenses. We have a very limited amount of accounts so that we can just concentrate basically on the writing off of the accounts receivable, but also be able to see the effect on a trial balance in context. We also have the assets here in the accounting equation equaling the liabilities and the equity, of course. And we can see that we are in balance down here by saying that the debits of the assets and minus the liabilities adds up to 0. Therefore, the debits equal the credits. So note that there's only one column here, but we're saying the debits minus the credits equals 0. That green 0 means we're in balance. Net income as of now is just that $378,000. Then we have the general ledger over here. We will post our activity to the general ledger, which of course is in the same order as the trial balance. Assets in green, and then the liability in orange, and then the equity in the light blue, and then the income statement in the darker blue. Then we have this information down here, which will be the accounts receivable subsidiary ledger. So this is going to be similar to the general ledger up here, but by contrast, instead of recording this information just by date as it will be done in the general ledger, we're going to record it by customer down here. So we're going to need to know that in order to be able to account for customers that cannot pay. And so these are going to be the customers in names. And if we add up all the accounts by customer, then it should sum up here to this 1,000,002, and that ties out to the receivables here, and that ties out to the receivables here. At the end of this problem, we're also going to take a look at an aging account, and this will come into play later on, so we'll take a look at that towards the end. Alright, so let's take a look at our first transaction, which is going to be on 2/17, which says, determine that CW company would not pay the amount owed. So we're saying that one of our clients, one of our customers, is not going to be able to pay us. We've determined that their account will be uncollectible. So under the allowance method, then, how are we going to record that? How are we going to adjust for that? Now, note that we can see this down here in our ledger. If we go down to our subsidiary ledger, here CW owes us this $9,000. That's the individual that is not going to pay us, or the company in this case. So we're going to have to write that off. So the question is cash affected? In this case, no, we're not going to get cash. That's the problem. And so the account that is affected is the receivable. We're saying that receivable there includes $9,000 from CW, and it will not be paid. So that needs to go down. We need to go down even though we haven't gotten payment for it, because we don't believe we're ever going to get payment for it at this time. So we need to take it off the books. So that has a debit balance. We're going to do the opposite thing to it then, which in this case would be a credit. So I'm going to copy the receivable, right-clicking and copying in L6, put our cursor in C6, and this we're going to paste it here. Going to right-click, paste it 1, 2, 3, just the values, not the format of the cell, values only. Then we'll go into the credit column. We are going to be recognizing credits in this worksheet with a negative, so I'm going to type in negative 9,000. And when we select enter, it's going to put brackets around it because of the formatting of the Excel worksheet, like so, and it also includes, of course, the comma here to put it in a number format. Then we're going to also have a debit for the same amount for 9,000 because we need an equal number of debits and credits. And the only question then is, what account should we debit? And normally, of course, we would get cash in this situation, and we would be debiting cash, but we didn't get any cash. So under the direct write-off, under the allowance method, we are going to debit the allowance for doubtful accounts. So notice what we will not be doing is expensing it at this time. And under the direct write-off method, we would be expensing it as bad debt expense at the time it was written off. Now, why are we doing this? The idea being that we want to try to match the expense with the revenue. And so that means that in the period that we generated the revenue, we would like to write off the amount of those revenues that we think are uncollectible in the same time period. And in order to do that, we're going to have to do an estimate, which we'll do at the end of this problem, and we'll estimate the bad debt for the time period all at one point in time. But when we write off the debt, when it becomes uncollectible, that's probably going to happen at a later date. And so you'll note that if we wrote off the expense now, then it wouldn't be matching up with the revenue that helped to generate it. So we're going to use an estimate to try to match that up under the allowance method. So what we have here under the allowance account then is this $40,000. That represents the amount that we believe will be uncollectible. So if we think about the receivables, then we now have a contra account related to the receivables. So the receivables, $1,000,002. Of the $1,000,002, we think that $40,000 have been estimated to be uncollectible. Now we're going to put that in a second account for a similar reason as accumulated depreciation is a contra asset account. It's a contra asset account, meaning it's an asset account with a credit balance. You can see that with the brackets. So normal asset accounts have a debit balance. This is an asset account, but it has a credit balance. Why does it have a credit balance? Because basically it's kind of like the second half of the receivable account. This is the receivable account. It's an asset. And part of that, we kind of broke it in half again, the T into, like a 7 and an R again. And this is kind of like the credit half of the T account that we think are going to be uncollectible. Now, we're going to put it in a different account for a couple reasons. One, we don't know who is not going to pay us. We just made an estimate based on past experience that of the $1,000,002, $40,000 will be uncollectible. That's just an estimate that we've made based on past experience. And we can't write it off to a particular person, a particular customer. For example, if I scroll over here down to the accounts receivable, these are the people that owe us. We don't know which one's not going to pay us, but we do know from past experience that someone's not going to pay us. And therefore, we're going to estimate that and put that into the allowance account. We're also telling our readers, hey, it's just an estimate. People owe us $1,000,002, but we want to be straight up front that based on past experience, $40,000 not going to be paid. Therefore, the $1,000,002 minus the 40 is $1,160,000. That's the net receivables at this point in time. Now, when someone does not pay us, then we're going to say, hey, we already estimated that. We already made this account saying that these people aren't going to pay us. Of that 40,000, 9 of it has now come to pass. Now we know who's not going to pay us, and we can take it out of the allowance, meaning we're going to reduce the allowance and reduce the receivable. So basically the allowance has the 40 in it, and we are going to debit it, making it go down. So I'm going to copy that account. I'm going to put that on top in C5, right click and paste 1, 2, 3. And obviously it might be easier to think about the allowance by first doing the receivable, and then we know that we're going to have to do the opposite to the other account. Notice there will be no net effect on the net receivables, meaning this minus this will be the same because the receivable is going to go down and the allowance, the contra account, is going to go down by the same amount, 9,000, making the balance the same. So let's post this out and see what happens. I'm going to make this a little bit smaller down here in the taskbar. Let's bring it down to like 80 is probably good. I'm going to scroll over here so we can see more information, and let's post this out. So we're going to go to the allowance. Now it's in the same order. Here's the allowance, third account. Here's the allowance on the general ledger, third account. And we have the debit. So we're going to be on the debit side of the allowance. I'm in cell S9. We're in cell S9. We're going to select equals and then point to this 9,000 over here. So what's going to happen when we hit enter? Well, this is a credit. This is a debit. Those are opposites. The 40,000 is going to go down by 9,000 to 31,000. That, of course, puts us out of balance here. We see the 31,000 here, and we're out of balance here and here until we post the other side to accounts receivable. So here's accounts receivable. We're posting that. That's the second account on the trial balance. That's the second account on the general ledger. We're posting it to the general ledger. We're going to be in the credit column. So we are in cell P16. So we're in cell P16 equals. Then we're just going to point to that 9,000. What's going to happen once we hit enter? Well, this is a debit. That's a credit. It's going to make it go down. We're doing the opposite thing to it. The receivable goes down to 1,191,000. That's the same number here in M6. And note that we now have affected the receivable account. we're also going to have to see what happens by customer. So note what we think about when we think through the receivable. We often think of, how much money do people owe us? Well, people owe us $1,191,000, and we estimate that the 31 will not be paid. Next question, who owes us that money? The GL doesn't give us that information necessarily because it's only in order by date. So we're going to have to scroll down here to the subsidiary ledger, and we're going to look for the individual that we think is not going to pay us. Here's the individual or the company. So we're going to put this same information that we have here in the GL down here, but in a bit more complex nature, in that we're going to have to do it by customer, not just by date. So in cell T31, we're going to select equals and then point to that 9,000. We're going to post that same information down here. So there we have it, and then it goes down to 0, so we no longer owe, or that individual no longer owes us, the company no longer owes us because we have written it off. And if we add up all the companies that owe us, it ties out to $1,191,000, which is the same amount on the receivable, which is the same amount up here in the trial balance. All right, let's see what happens next. We have on 4/12, G Company paid a partial payment and went bankrupt. It is determined that we will not receive the balance. So G Company paid us the $20,000, and then we're assuming we're not going to get the balance, the difference of $10,000. So the questions we're going to go through is cash affected. Yes, we got money, we've got $20,000, so cash is going to go up. Cash is a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So I'm going to right click, going to copy the cash, going to put that on top right next to the date because the debits traditionally go on top. Right click, paste it, 1, 2, 3. The debit will be for cash received of $20,000. So there's our $20,000. I'm going to make it a little bit larger on the taskbar down here. Let's make this a little bit larger. I'm going to scroll back over so we can see that a bit more clearly. So there's the $20,000 we got in cash. Now, of course, we got paid cash, and who paid us the cash? The customer, and they owed us the cash. So we're not going to credit revenue, of course, because we already credited revenue in the past. What we're going to do is say people owed us $20,000 represented by the receivable. That receivable now needs to go down by the fact that they paid us. So I'm going to put that in there now. Now there's going to be more than 2 accounts affected, but this would be the normal transaction if someone paid us the money for a receivable. Receivables have a debit balance. It needs to go down because they no longer owe us money. So I'm going to copy that, and I'm going to put that underneath, right click and paste it 1, 2, 3. And it's going to be a credit. However, it's not going to be a credit for $20,000 because they owed us $30,000. If we look at the amount of money that was owed us down here on the subsidiary ledger for G, $30,000. Now, we're going to say that they only paid us $20,000, but they're not going to give us the difference. Therefore, we can't just write it down $20,000 because then we'll still show that they owe us $10,000. And if we never believe that we are going to receive that, we got to just give that up. We're not going to get it because they went bankrupt. So we're going to have to take it off the books for the entire $30,000. So that means the credit then will be for $30,000. So I'm going to put our cursor in E9 negative $30,000. So there's the credit. Now, of course, the debits do not equal the credits. We're going to need one more account. So the other account is going to be $10,000 because we need 20 plus 10 to get to the 30. I'm going to use our negative sum function. I call this the plug function in this type of worksheet to put this in there. So instead of selecting equals, I'm going to select negative, SUM, and then sum these up. So I'm summing it up, but I want it to flip the sign. So instead of it being a negative 10, which is what sum function would be, this will be a positive 10. Therefore, the debits minus the credits will then equal 0 in this case. So that's what we're going to put. We're going to need to put some other account there in order to put this in balance. Also note that this, I'm putting the debit on the bottom, and under a perfect world, we'd have the 2 debits on top, and I'm formatting it so that we have a debit and then a credit and then a debit, and that's not as perfectly proper, but if it is helping you to build the journal entry to think through it in a way that doesn't have all the debits on top, then I would prefer to do that if it's something that will help you think through it, and if it's something that you go back to and you have a better audit trail, meaning I can look at the journal entry and see what happened, then I would break with the rule of having the debits on top and the credits on bottom. But just keep that in mind that traditionally we have the debits on top and the credits on the bottom. I'm just thinking through it in this way, and I think that's worth doing. So we are then going to see what account we need to put this into. We're not going to get the cash, therefore we're going to debit the allowance.